Hey guys, welcome back to the channel. Now in this video, both of us are going to share with you 3 stocks that we are having our eyes on. Now guys, none of these 3 stocks we own, as a disclaimer. And of course, everything we say is educational, not financial advice. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. Now guys, it is important to remind you, none of this is a buy and sell call. However, we will be sharing you with what we think on their management execution.
Yes.
And also, these are the 3 companies, hashtag SJC and SD.
Yeah, and also just another clarification again, this is in our watch list, but doesn't mean that we will buy. We don't own on any of these company at the moment. I don't think I will also. Yeah, this is just for me, just to see for fun.
Yeah, watch list. So let's start with Hackstack. So it is flat. Oh, well, it's actually down 20%.
Yes, but overall it's actually up 10x.
Yeah, I remember we did a video on this, I think 2 months back, something like that.
Yeah.
So you guys can go and watch the video. We'll probably link it here somewhere. And yeah, so what's interesting?
Okay, so the first one is in their cash, right? So you notice that in their, this is their latest quarterlies. So the investment in associates, I believe I got highlight this in the previous video. Yeah, so they basically sold all of their associate right now, and they have about 12 million left in their cash balance after they sold these associates. So they got a huge cash pile in their bank right at the moment. And just to see whether they did deliver or not, whether they got execute their new business, which is the tech business, and I'm going to talk a little bit about that. But generally, overall, their revenue is up 64%.
Right.
Cost of sales is up 61%, but their profit before tax is actually up 5 times.
Yeah, so you can see very, very like how powerful like small numbers are, right? So obviously we never look at the other costs, but just look at here. You might think, well, if sales goes up 64% and cost goes up 61%, you might think, oh, okay lah, it's just
but it's still like a 2x, you know.
Yes.
If you look at the gross profit.
So if you look at it, right, guys, see, just think of it this way, right? So last year there was small base out, to be fair, 458, right, got the previous quarter. And so if you look here, right, you've got 64% increase and then 61% increase. Okay, so that's roughly what, 3 million.
Yes,
right. So if you compare here to here, right, cost only went up 5 million. Then here, but profits went up about 6 million.
Yeah.
So 6 minus 3 million, or 3 million on 4.8 million of profit is 2/3. So just that 3% difference, right, contribute to additional 2/3 of income.
Yep.
Now we haven't looked into others. I suspect, well, there's this other income thing here.
Yeah.
So definitely it contributes.
Yes. Okay. But this is just for you to have a look on that. How have they been performing overall? So if you look at their breakdown numbers, right, the only business segment that has been growing pretty well is their logistic business. So I already highlighted over here, their revenue actually grew more than 2x if you compare between these 2 quarters. But the rest of the business is still okay only. Their trading business, I believe they trade building material when Hackstar actually took over the company. Actually, it also has been increasing okay, but it's not as impressive as their logistic business. So this is just something for you to know. Oh, and one more thing. They are initially making a loss making their logistic, but right now they are making tons of profit right now. Yeah. Okay. Cash flow, nothing much also actually to say. The only reason why their cash flow has been performing better than their last quarter is because their profits has been increasing. That's it. But one thing that is concerning is that their payables right now is actually increasing. So they're actually paying a lot of money back to their suppliers.
Not always a good thing.
Yes. Okay, so this is actually a very quick review on their latest quarterlies. So the final takeaway is that they have 12 million in cash for future investments. So they haven't really used any of that money yet. But they say that most likely that future investment is something to do with their tech business.
Yeah.
But as of now, there's no sign of this tech business yet.
Right. It's just a story.
Yeah, still just a story. And they are still trading at 100 times.
A lot of people are believing in the story. Basically.
Yes,
right?
yes,
That's
yes.
really what it means.
Yeah. So that's about it for Hackstack. Yeah.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. So SJC, thought it was a school or something.
Yeah, SJKC.
Yeah. It's been flat for more than a year, but there was a big pump, right? Because there was a lot of things happening, that caused a big pump.
I believe it's like a 5x pump.
Yeah, it's huge. It's huge, right? Over the past 5 years, it's more than 3x. So you're looking at more than 15% a year, maybe closer to 20%.
Yes.
So yes,
this is just their overall quarterly performance. So you can notice, right? I mean, it's pretty obvious already why they are pumped so much, right? It's because you look at this, all these losses, then suddenly a turnaround. Like, oh, impressive. I believe it's like a 7 times increase in profits in just 1 quarter. So that's actually pretty looking
If
good.
I'm reading it right, it's quite crazy because the revenue was 1.7 million, but the loss, not the expenses, the loss was 2.4 million.
Yeah, actually,
I rarely see that.
Yeah, same. I think it's something to do with the management in the past didn't do something right.
Right, okay.
Yeah, they didn't manage their costs pretty well.
Sure.
Yeah, so this is their latest quarterlies again. Just a quick view on their top to bottom line. Revenue is up 5 times. So very, very impressive. And then their cost of sales is up only 2.9 times.
Right.
Yeah. So they have been managing costs actually very, very well. And of course, previously they're actually making a loss, but now they are making about 6.7 million in profit.
Right.
Cash flow, also the same thing. Previously, they are actually making losses in their operating cash flow, but right now they are generating profit thanks to their top line and bottom line. Okay, so this is a quick announcement on in their quarterlies. So they actually reported that on 21st of November, they actually disposed 5 parcels of shop offices. And they proposed that maybe this will actually help them to generate about 11.5 million. So assuming, right, if they actually sold all of these parcel of shop offices, they will be in a net cash position of 10 million.
And it will increase from what to 10 million?
I believe it was still in the net debt position. Let me see.
Net debt, right? Okay.
Yeah, slightly net debt. But then it will become like a net cash.
Yeah, that's more than their revenue. The quarterly revenues are, right?
Correct. So quick takeaway again. Basically they have a great turnaround, but then there's this thing called the demand for outdoor advertising, right? We don't know whether is it sustainable. Of course, obviously right now it is because everybody's going back out again after the lockdown, but then the thing is that can it still grow another, 20-30%?
Right.
Yeah, that's the question that you need to ask, or will it maintain or stagnant or maybe even drop? And then there's a 10 million cash allocation right now, assuming if they did manage to sell. So you want to know how are they going to allocate that cash? And basically the last question, if you plan to invest, right, you need to know what is their next best move. From what I have read in the past, or I have actually analyzed a little bit, is that they are actually expanding their business in doing more of this POOH advertising. So POOH is basically those cars, right?
Yes.
When you drive out, you realize that on top of the car, there's like this rectangle advertisement board, right? Yeah, so they're actually doing that car advertisement right now. So they are doing that, but then will that drive more revenue from them? Then I'm still not sure.
Yeah, I think definitely there will be demand for outdoor advertising because a lot of companies always want to maintain their branding.
Yes.
So it's naturally, right? They will still want to do it. All right, guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive. All right, we move on to a cake business, right? SDS. So SDS is one of the best performing stocks, actually.
Yeah. So just a fun fact, actually, this has been on my watch list since June. I believe it was a very early June when it was around 40 cents or even lower.
Too bad didn't buy. So
yeah, sadly I didn't buy after it stung. The reason why I didn't buy is actually very simple. I'll share with you a little bit in the next few slides. So just an overall picture, right, on how they've been performing. I mean, look at it, man. It's like going on an upward trajectory. Like there's like nothing, there's no resistance to it. And then if you notice, right, their financial end 2023 second quarter actually surpassed their entire financial end 2022's profit already.
Yeah, that's crazy, right?
Yep. So cake business, by the way. This is just their latest quarterlies. Revenue is up 62%, cost of sales is up 52%, and their administrative expenses is also up 12%. But the net profit is actually up 127%.
Yeah, I mean, you can see the huge difference, right? Because again, we do the same thinking and math, right? So there's a roughly 30 million increase.
Actually, this is cumulatively. I use it for cumulative.
Okay, so here is a 40, we are looking at 50 million increase.
Yes.
Versus a 30 million increase in cost. So there's an additional 20 million in profit. Even when you look at the admin expenses, right? It's only increased a few 100,000.
Yeah.
Right.
Exactly.
And then selling and distribution only increased 4 million. So 20 million, 60 million, plus minus. Yeah, you're looking at 13 million from 105,000 to 13 million. Huge.
It's a very impressive performance. Okay, so cash flow also up like I believe more than 2.5 times to be exact. So right now they are generating about 25 million ringgit.
Yeah.
And this is just their segment breakdown. So far, the one that is bringing in the most revenue is their retail segment. I believe that is their cake business and then their cafeteria business. So yeah, the one is, if you look at in their cumulative quarter, they are up 2 times.
Right.
And the final takeaway is that obviously you need to know the demand for cake.
Yeah, I mean, it's pretty much there.
Yeah, correct.
Go try out their cakes, right? They have a few outlets.
Yep. But right now, majority of their outlets is actually in JB. In Johor, a little bit in Bangi. I think they only got 2 stores in Bangi and 1 store in Negeri Sembilan.
Okay.
Not yet in KL.
Not yet. But
then they did say that they're going to expand. So we'll see whether we'll see more SDS stores near us.
We shall see.
Yeah. And one thing you need to know is that whether their 10% revenue and profit growth, whether is it sustainable. Because back then in June, right, when they were trading at a PE of, I believe, was 20 to 30 times, when the first thing I say is that this is unsustainable.
For cake business, right?
For cake business, why are they like being traded as a tech business kind of valuation and kind of growth? So I was like thinking, okay, maybe I'll just take a pullback. I'm not going to like invest. And then their growth potential is only up to Malaysian population. I mean, they do sell their cakes to Singapore, but that's only like a very minor chunk of revenue.
I mean, there's like so many other cake businesses in Singapore.
And the space is very competitive. So I'm not sure how can they consistently grow another 10% in the future. Yeah, so that is my only concern for SDS.
Yeah, but of course, since they're not in areas like Penang and KL, I mean, there are 2 ways you can go about it. One, you can look at it and say, well, there's a lot of growth potential because of that. The other way to look at it is because KL and Penang are so competitive, if they were to come here, the returns on capital would be actually a lot lower.
Yeah.
But if I were in their position, I would still try out maybe 1 or 2 stores.
Outlets,
and then from there, start to see and gauge whether or not.
Yep. Makes sense. Yeah, I think that's about it for our 3 watch lists. And
if you want to see some of our other watch lists and actually stocks that we invest in also, you can head over to our FIRL Pro. You can read some of the reports there, 5 to 10 minutes long.
Yeah.
Very straightforward. So yes, these are some of the performances that we've had in November. So do check it out. And if you just want to test your waters, you can enroll for free. We give you free samples to look at it, and if you have any questions, right, just send us an email, send us an Instagram DM, or even just comment the YouTube channel. Let us know what you want to know. All right.
And
so yes,
I think that's about it. Nothing much.
All right, guys, thanks for staying all the way until the end. Hope you enjoyed the video, and see you in the next one.